Welcome back to the Dividend Diplomats YouTube channel. You've got Bert, the Hurt Locker, and Lanny, the Dividend Investors here, the Dividend Diplomats, guys. We've been doing this since circa May of 2014, guys, going on 10 years here of talking about dividends, about 4 years of talking about dividends here on YouTube, guys. We're going to talk about three stocks, not three stocks to buy, but really three stocks to recap from a certain group of stocks at the end of 2023.
Smash that subscribe button. Give this video a thumbs up. Every dog has his day, and every dog's going to have its day right now, especially your dogs of the day.
Yep, Bert did a little teaser there, guys. We did a video a few months ago at the turn of the year about the dogs of the Dow of 2023. And in fact, one of those dogs, they had to put him out, uh, unfortunately. But we have to keep them on the list because they were a dog of the Dow of 2023. We're going to recap and see what they look like now that we're almost done with the quarter. Kind of, yeah, was it a wise choice to maybe buy the dogs,
Yeah.
or are these dogs still barking?
Yeah, because it is an important point because the dogs of the Dow is a investing strategy for some, where people take the worst performing stocks of the Dow, buy them, and assume that in the long run, those companies are going to add value and come back. It takes a very long-term perspective, and it takes a stomach because some of these dogs don't always perform, don't always just immediately shoot up the way you would expect them to.
No, no, they don't, guys. So the recap: the three stocks were Walgreens, WBA, Johnson and Johnson, the Dividend King, J&J, and Chevron. Ticker symbol CVX, the Dividend Aristocrat. So three of these were the dogs of the Dow. They were the lowest performing dogs of the Dow, the three worst performers of the Dow, guys, of 2023. So they should have had some great 2024, right? Everything should be rocking for them if they've gone through so much trials
Yeah,
in 2023 that their stock
especially
price was plummets, right?
especially Johnson and Johnson. They're the ones that shed Viatris and that albatross, so I think should be great for them, right?
You can do, right?
Oh my gosh. Yeah, I'm so tired right now. I meant Kenview. That's how much I thought about what they spun off. That should tell you everything you need to know.
Here's a nice piece. No, I'm joking. So, guys, Walgreens, let's get into it. Walgreens has SHIT'd the bet so much that, yeah, Dow said, get out of here. We're literally, you've barked your last bark, dog.
Forget
So,
about it.
Walgreens, WBA, yep, down 23% more this year. Since last year, down 40% almost, trading at $20.62. Walgreens also had that wonderful dividend cut, the loudest dividend cut of 2024, to say the least.
Wasn't it the first
Um,
dividend cut of 2024 too? They just welcomed the new year with a bang.
the first cut is the deepest. They did cut their dividend. Quick PE is 6.33. They cut it down, though, from 48 cents to 25 cents a share a quarter. Payout ratio is great, right? At
Yeah.
31% now.
Yeah, it's fantastic. Of course, you got plenty of room to grow that dividend in the future after you cut it.
And their yield is still at 4.85%, but at the time that they cut it, it was pretty much at north of 8%. Um,
Yeah, there's what do you really say about Walgreens at this point that hasn't been said already? The Dow doesn't want them in there. They're struggling to grow sales. They're struggling to figure out what to do with it. And much like we talked about um, Dominion in yesterday's energy, Walgreens is always talking about a shed and boots alliance. They're always talking about shedding some of their earning assets. So it's like, what do you do with this company that just continues to underperform?
I don't know. We do own a lot of my wife's accounts, so it's been a tough pill to chew on here.
Same here.
Um, yeah, 5-year return negative 67%. So just losing all sorts of value here, guys. The 5-year dividend yield is obviously higher than their current yield as well. So no good margin here. Yeah, this dog is again still terrible.
Yeah, so I guess to put a pin in this one, is Walgreens still a dog? Yes. Wait,
Or what about the second one?
why are you coming to me for the second one?
Well, because you own a couple hundred shares of this stock.
Yeah. Johnson and Johnson, ticker symbol J and J. I famously bought on our channel 1 share a week at Johnson and Johnson for my wife and I until we each hit 100 shares, and we stopped that journey last year. And Johnson and Johnson stopped its appreciation journey at the same time because it has not been a great run for Johnson and Johnson ever since we hit that 100 share threshold. This year to date, I mean, they're basically flat, right? So they're down 0.48% year to date, up 3% over the last 1 year. I'll still call it basically flat. Their 5 year return, unlike Walgreens, is 15.7%. So they've added some value to shareholders. Not a lot, but some. The story with Johnson & Johnson, though, is the Kenvue split, the split off, the complications that came along with that, the lawsuits. It just seems like Johnson & Johnson can't get out of its own way, at least until they start showing growth in this new focused pharmaceutical company that they are, and these lawsuits get behind them. That seems to be what's really holding J&J back.
Yeah, I mean, the PE right now is below 15. Dividend payout ratio is always rock solid at 45%. 61 years of growing dividends at 5.75%. Dividend yields right at 3%. Again, just flat this year, Bert. So I mean, it's a great dividend king, but what's the growth prospects like now that they're almost a pure pharmaceutical, right?
Right. It changes the dynamic of the company. And it seems like everyone, including analysts, including management, are still trying to figure out what that new dynamic is. And that's why they keep remaining in the dog section of the Dow.
Ugh, tough year, tough time period for J and J. Again, if you go to, bottom beginning of the year or now, you're in the same spot.
Yeah, that's a nice thumbs up there. So there's kind of still a dog. We'll still give them dog rating.
You could say at least you're now Walgreens. All right, but now the third stock, guys, Chevron, CVX. Do they have a little bit, better of a performance here? They always say after if you pick three stocks, one's gonna the bed, one's gonna do okay, and then one's gonna do really well.
That was a direct quote from Warren Buffett himself,
Yeah,
wasn't
yeah, direct quote from Lanny Buffett. Now I wouldn't say this company's doing really well, but they are doing better than Johnson and Johnson ish. They're up since becoming dog of the Dow. They're up 4% this year. So
it? All right. All right. That's not terrible. So, but over the last 5 years too, Walgreens down 67%, J&J up 15.7% over the last 5 years. Chevron is up 24.25%. So they have delivered the highest returns to shareholders over the last 5 year period.
it's very true, guys. Very true. And some of the metrics here on Chevron, their PE currently is lower than J&J's. It's at 12.4 based on future earnings for the next year. But Bert, how about that payout ratio?
52% with that annual dividend of 652. So it's right in the middle of our perfect payout range. That's always been a nice thing with Chevron.
Yeah. Yes. Safety, a little bit of room to grow. 5 year growth rate 6.25%. Been doing it for 36 years. Now that they're up a little bit this year, that dividend yields at 4.19%, which actually trails their 5 year average, which is 4.25%. So you're not getting any additional margin there to the average yield.
That's interesting, though. I mean, the metrics are looking solid for Chevron. If you really want my opinion of how they look, it's just a great oil their company, and they're just fighting Exxon right now for acquisition. So they're making moves.
Would you buy any of these dogs?
Not Walgreens. The other two, sure, I'd consider them. I own them. I like them. I wouldn't mind them. I mean, if I'm gonna buy them, I'm gonna buy the ones that have
Yeah.
like decent payout ratios and have some potential growth prospects, right? You can't tell me Chevron's not going to be around for a while. You can't tell me Johnson Johnson. It's going to take time for them to figure it out, but that's there in my mind when you say the dog or the Dow investment strategy. Those are the two that you would look at for the ones that you would invest in for long-term potential gains. What do you think?
Yeah, definitely better future prospects right now. Obviously, pharmaceuticals. Unfortunately, we're in a pill-driven world. It's sad. And then energy, I don't think is going anywhere, but different but better in there. Energy is here, guys.
Yeah.
But what do you guys think?
Yeah.
What do you guys think of these dogs here? How many of these three are you holding? Bert is holding all three. I do have two.
Thanks for the
Um,
reminder. Thanks for the reminder, Lanny.
Great run of Chevron. Like you
Yeah.
got, you know,
Yeah. Chevron's been a good one, at least out of
yeah.
this. Yeah. Let us know what you
Johnson
think.
and Johnson is solid.
Yeah. I don't mind it. I don't hate that I have 100 shares of Johnson and Johnson. It's just kind of funny how it all shook out. Let us know too. You own them. What other dogs are you looking at? Do you believe in the dog of the Dow investment strategy? Let us know down there in that comment section.
Guys, hit that subscribe button. Give us a thumbs up. What are you waiting for? You're rocking with us or you rocking against us, guys? This is the diplomats here. Come on, guys. Let's make some noise. But guys, keep saving, keep investing. Let's get to financial freedom, build that dividend income. Bert's smiling it over there. I'm gonna slap the piss off his face right now.
You couldn't if you tried. And just remember, you're either with us or you are against us, Jack.
And that was Bert the Herd and Lanny from the Dividend Diplomats. Over.